Welcome to Petros Family Wealth. Today we're going to talk about two things to watch out for when considering structured products. And just as a reminder, this is not a recommendation for you and your family or a past recommendation. This is purely from an educational standpoint to arm you, educate you, help you become a better investor when considering structured products. So with that in mind, if you enjoyed today, please like, subscribe, and hit that notification button, and let's dive in. The two things I want to mention as far as what to watch out for structured products is one, structured products generally do not include dividends in their appreciation. And then the second, the taxation of principal protected notes. So the first one I want to touch on and give a good example of in regards to maybe international underliers for a structured product. So at least currently, as of the winter of 2023, the international stocks pay a higher dividend than the US stocks. And so when considering the underlying indice, we want to be able to make sure that when we stress test and take a look at some examples, that we are aware that we're going to miss out on some of those dividends. And so people might be tempted to for something like this, and there might be other considerations I'll touch on in a second. But in this example, this one's based off of the Euro Stoxx 50 index and the IFA, which is an international or developed markets ETF. It's for a 5-year term, has a barrier protection of 35%. And we have another video here on the different types of downside that you can watch, and we'll put it in the description. But the thing that might be tempting is this upside participation, 2 times the upside over that course of that 5 years, based on the worst performer of those two indices. But as I'll show you in a second, that might not be as enticing as people think. Because right here is an example of the Euro Stoxx 50 ETF, which is a nice proxy here for that underlying indices of the structured note that I showed you before. And what this is a 5-year rolling return, both on the price of the index, as well as the total returns, which includes the dividends and interest that's assumed to be reinvested. In this example, if let's see, January 14th, 2020, if this structure were to be available 5 years previous, somebody were to purchase it, 5 years later, the price appreciated 14%. And in that example, there was 2 times the upside, so it'd be right around that 28% return. But it actually wasn't as good as the total return of the ETF itself. And so that 2 times upside actually translated in a lower total return for the client. Now, there might be 2 reasons why somebody still would consider investing in some of that structures. One is maybe they're a little more concerned about that downside, so they like having that barrier protection. And the other possibility is even if somebody wanted more of the upside, being that it might be in a taxable account, the structured note at the end of that 5 years would be a capital gain. Versus if we had the ETF, then we would have been paying taxes along the way on those dividends. And so you got maybe a similar return, but you probably have to be in a higher tax rate in order to gain that benefit. The second thing to watch out for is in regards to taxation on principal protected notes. So again, 2 different types of principal protection. One is with FDIC insurance. The second is based on the full faith and credit of the issuer, similar to a regular bond. And the way this one works is generally with that more protection, you have a little bit lower upside, just in general. However, that during the term of that investment, you will be taxed along the way with phantom income. You'll be taxed along the way with that phantom income at a similar rate that you might have had if you were to invest in a CD or a bond. And so you got to be careful for taxable accounts, because if there's a gain in that type of structure, not all that gain will be capital gains, and actually you'll be paying taxes along the way likely as well. So those are 2 things to watch out for. Hope you enjoyed. And if you did, please go ahead, like, subscribe, and hit that notification button. Thank you so much.